Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Pavitra Parekh and Prashant Nair makes his appearance on Trading Hour. Hi.
Hi, guys. Welcome back, Pavitra. I think you were off, but you've been here this week, right?
I was here yesterday. Prashant has just completely been spaced out on this. But I was here yesterday, but after a good break.
Yeah. She's a sort of globe-trotting, traveling sort of
impromptu
only as much as work lets me, which is not a lot.
All right, let's just quickly take stock of the markets in terms of numbers. We are down 80 points in the Nifty. The Nifty is hovering around 17,250. It's fallen a bit in the last 1 hour or so. As you can see, from 10 to 11, there has been a slide in the markets. The dip at 9:30 was bought into, but then we've slipped a bit. The Sensex is down close to about 250 points. The mid-caps, which were outperforming till yesterday, are showing you a streak of underperformance. The mid-cap index down nearly 1%. The Nifty Bank is down close to about 1% as well. We are in a bit of a wait-and-watch approach because that pivotal monthly jobs report out of United States will be out post-market hours. So that's going to be crucially tracked. So in that context, we are in a bit of a wait-and-watch. But not bad still, right? On good U.S. market days, we tag along. On bad U.S. markets days, like yesterday, when the S&P and the Dow had sunk close to about 1%, we're getting away with a nick of about 0.3, 0.4.
Absolutely. And that, that is absolutely true. By the way, as we start this edition of Trading Hour, we are at the day's low on the Nifty, which is, almost a 1% cut now. Yes, we are at the day's low. And the Nifty Bank was the problem area yesterday. It again is back at the day's low. It's down 1% as well. It's not very large. It's not very small either. The point is, it seems like risk-taking is on hold till we get, not just here, but globally as well, almost a holding pattern kind of structure till we get the jobs report data later today. That is tended to, you can go back and look at the last 6 or 7 months data, and the reaction thereafter, that has tended to be significant. And this is a Friday, and you'll react to that Monday morning. So I think that is the one thing which is keeping and I think rightfully so, people away from sort of launching headlong into this. It could disappoint as well, which perhaps, this is bad news is good news kind of situation, right? If the number is less than 200,000 and it's significantly below expectations, the number of non-farm jobs the US adds in September, that might, who knows, lead to a dollar sell-off. Consequently, it might be positive for emerging markets when we come back. Because the entire narrative, whether data is now slowing meaningfully and Fed has done enough and now they need to wait to see the effect of all of this to take effect, I think that kind of chatter will start. So it is important. And I think, on the eve of that, we are basically seeing a bit of sort of step back as far as risk-taking is concerned, at least on the long side. On the short side, should you be aggressively shorting? I wouldn't be so sure either. We just don't know. And I think U.S. markets were on hold yesterday because of that as well. Pavitra.
Hi. So, it is a bit of a wait and watch. Everyone's waiting out for that big cue from the US. So it'll be interesting to see how this trading session pans out. In terms of the stocks today, it is really the auto pack. Some of the names like Hero Motor, which are holding up. Of course, you have Titan, which is doing very well after the update that came through on the Q2 business update. And Reliance is also one which is holding in the green and adding some kind of support to this market. In terms of the downside, you have a lot of the stocks from the financial space. So some of the bigger banks will be up on your screen. Some of the metal counters with saw a big run yesterday are seeing some cuts today. So the likes of Tata Steel, JSW Steel, Hindalco, just naming a few of those. So that's everything that we're watching as far as the market action. And we'll keep coming back to this. But first up, let me run you through everything that we have lined up for you on this show today. It is a bit of a down day for the market, but the key indices at the day's low. Banks and metals lead the decline, while the mid-caps are relative underperformers. The Indian rupee has also hit a fresh low of 82.35 against the US dollar. As crude and the dollar index strengthen, more analysis is lined up for you in just a bit, and we will be joined by Sani Agarwal of SBI Securities to decode the road ahead for markets later on the show.
In our corporate corner today, we will be joined by the management of JBM Auto to discuss the outlook for the sector and the company.
Earnings season kickstarts next week with the IT bellwether TCS due to report its Q2 earnings on Monday. We line up all the key expectations from the large cap IT names in our special segment, Quarter Say, Quarter That.
Titan and Equitas small finance banks surge on the back of strong Q2 business updates, while Hero MotoCorp zooms ahead of a large upgrade call from Jefferies and the company's electric scooter launch today. All this and much more in the next 60 minutes. But let's start this discussion with talking about the auto sector and the outlook. Inviting on the show Nishant Arya, the Vice Chairman and Managing Director of JBM Auto, to discuss the company's order pipeline, the EV sector demand, and much more. Nishant, morning, and thanks so much for joining in. First, if you could give us a sense of the festive season, the kind of pre-sales that you've had so far, and how would it compare with last year and, say, even pre-COVID?
I think this is an opportune time where people are really understanding the need for electric vehicles and how different companies and the government is committing to ESG, and how in case of smart cities, they are looking for world-class products which are zero emission. And today EV is the best technology for committing to zero emission. So the perspective is very clear that the private sector, airports, schools, for all different applications, and even the end consumer who's using public transportation is looking at EV in a very big way. And EV is not something which is new to them, and slowly it is going to become way of life as we go along, especially in the public transport space, which is meant for the common man, because 90% of our country uses that today for different modes of transportation.
So can you tell us what the EV order book number is at right now? Because, I mean, last quarter we saw it slow to around 90 crores from this, over 300 that we had before that. So can you tell us what that figure stands at now? And also, what is the contribution of just the EV segment?
No, so about 500 to 1,000 buses is what we have in our pipeline with EV and CNG buses. And definitely always it happens that the second half of the financial year contributes more significantly, as you would have seen in the last year as well, to electric vehicle sales, because in the first half of the year, most of the customers create their demand and requirements, and in the second half they get it, unless and until they have done it in the last quarter of the previous year. So that's why we see a better growth pattern in the second half of the year. But nonetheless, this year we are seeing a very strong outlook from the private sector, from airports. So we have been working with customers like Indigo and Celebi, amongst many others, for airports, many Fortune 500 private customers who are really giving us a good momentum. And we are clearly seeing that they are having a long roadmap. How are they becoming carbon neutral? And we are delivering vehicles in multiple states. In Maharashtra, we have bagged our orders recently from Navi Mumbai, and we're working with different private customers also. We are delivering vehicles in Goa for multiple customers, in Gujarat, in Delhi NCR region. So, and we are definitely seeing that as every state has come out with its EV policies, a lot of new tenders and new projects are in the pipeline, which should get fructified in the next couple of months.
What percentage of your order book currently caters to the private sector? Any number? And are the margins higher?
No, definitely we are having standard margins in both the cases, but we are catering to private sector, which would be about 20-25% of the order book today. And I personally see in the next couple of years, this should go to 50% or more.
Nishant, you were just talking about the order book, which, looks quite healthy. But what we saw in Q1 is that in spite of you getting a lot of orders, the top line really is not growing, and it's been absolutely flat. So can you tell us why this is not translating into a revenue growth, and what is the kind of figure that you're penciling in for the full year?
So as I said, that first half of the year is always subdued compared to the second half of the year, and that has been consistent in the last few years as well. And clearly, the kind of transition time required is higher in case of electric vehicles because of semiconductor requirements, even though the semiconductor challenges have eased out a bit, and the availability has become better. But I think the way things are moving on logistics, also things will improve in the next couple of months, and we will see healthier quarters in Q2, Q3, and Q4. And this year, we would be looking at least 30 to 40% growth over last year. So last year, the bus business did about 700 crores of top line. And this year, we would be looking close to 1,000 crores or more.
30 to 40% growth in the buses division. Can you tell us about the tenders which are currently open, from which state and the size?
So actually, we are under NDA with our customers. When the tenders are open, that's why I've shared with you the orders which we have bagged and customers which we are working with in the states where we are operating. But definitely, as they get fructified, we'll be sharing with you in the next couple of months.
Okay, Nishant, one segment that really stood out in Q1 was the components division. It saw some 85% growth. Do you think that kind of growth rate can sustain?
Yes, so components division is doing very well because we see the passenger vehicle market has bounced back quite significantly, and the commercial vehicle market is also doing pretty well. And even in the farm equipment space, the growth is fantastic. So I think a combination of all three is giving it that kind of momentum. And I personally see that on an annual basis, we would be looking at least 50% growth on a YOY basis, if not more.
We've seen commodity prices come down reasonably in the last few months. Is there still a differential between what you're able to command by way of pricing and the raw material? Earlier, there was a gap. Companies were unable to pass on the entire burden of raw material increase. What does it stand at right now? What's the picture?
No, so definitely the gap has reduced substantially, but I would say still about 15 to 20% gap exists from where we were at a standard level prior to the commodity prices going up in last 1.5 years. So I believe that we should be able to get there maybe by the end of this financial year.
Okay, Nishant, we'll leave it at that. Thank you very much for joining in. That's JBM Auto for you. But another big mover today has been the rupee. It's another record low for the rupee. It's opened below that 82 mark against the dollar, 82.2. Lata is here to tell us more about the factors impacting the currency.
Well, no surprises that the rupee is under pressure. It's a double whammy. We have seen both crude prices and the dollar strength pressuring. It usually doesn't move together. When the dollar strengthens, commodities weaken a bit, but crude is rising for its own reasons because of output cuts announced by OPEC+. And that's, a good 9%. If you looked at the October 2nd, last week levels, it was ruling at about 86 and change, and now at 94.20 thereabouts per dollars per barrel. The rise is substantial. The other set of people who are buying are those who probably went short dollar, anticipating that India will get included in the bond index and there will be dollar inflows. So those short dollar positions are also getting covered now that that inclusion is not coming. The big buyers, dealers tell us over the past 2 days have been oil companies. The Reserve Bank is supplying dollars, but it is not trying to move the exchange rate. It's apparently looking like supplying only where the demand is, or at the level the demand is. Actually, the Reserve Bank would be happy with a gentle depreciation of the currency because the trade deficit, especially with China, is pretty wide. And the Indian rupee has appreciated versus the yuan. So a depreciation would be welcome. What the Reserve Bank fears more is depreciation anticipation, not depreciation itself. Dealers are talking about 80 to 50 as possibly the next level where a defense may come, and 83. But these are just wild guesses, There's always that expectation in round numbers like 82.5 or 83 where they expect the Reserve Bank will come and support. Just a word on the bonds. The yields have gone up. They've been going up continuously for the past 2 or 3 days. Again, for the same reasons, anticipation of bond index inclusion not coming through. I mean, now it is confirmed. The dollar index, crude prices moving up. And finally, US yields also moving up. So everything is pointing to higher yields. 7.5 is higher than the highest point in September. The chances are that it can even go to 7.62, the 10-year yield, which was the highest we saw in June.
Lata, just a quick point. Do we know on a weekly basis how much is the RBI spending in terms of dollars? Or
no, that is very difficult. What we get is only the RBI's full reserves position every Friday, which comes with a lag of 1 Friday. So we know the change in the reserves position, but as the governor very clearly said, a part of the reserves are invested in US treasuries. So when that price falls, also there is a mark-to-market loss. And the dollar reserves, the reserves are not entirely dollars. They're denominated in dollars. one guesses about 40% is in pound, euro. So all those mark-to-market losses are also
reflected in the actual.
Yeah, so if you say, oh, over 1 year, we went from 640 billion to 540 billion, he says 67% was mark-to-market losses.
Oh, wow. So that is a big number.
Yeah,
Well, majority number is M2M and not actual dollar sales into the market. Lada, thanks very much for that. Well, let's just take a quick look at the market once again before we take a break. 65 lower now. 17,268 is where we're at. Again, it's neither here nor there, holding. We'll take that break. First on the program, we are back with commodities with Manisha on the other side.
Hey guys, welcome back. You're still tuned into Trading Hour on CNBC-TV18. It is currently around a 60-point cut that we have on the Nifty. The mid-cap index is looking a little bit worse right now, so it is around 250 points lower on the mid-cap index, and it has been quite a shaky morning already. But let's also talk about the commodity space now. Manisha Gupta joins us, and today she's looking at silver. Manisha.
Thank you so much for that, Pavitra. Well, yes, it has been actually a strong week for many of those commodities. And if you are an investor in the Indian markets, then the rupee depreciation also has cushioned it. So the investments clearly have given you more money here. Of course, the markets will watch out for the U.S. non-farm payroll data today. But ahead of this week clearly has been on the positive side. For silver especially, we've seen nearly 8% of gains in this week. We are trading at a 3-month highs. And when you look at the range for the silver prices in this year, while that has been between 51,000 to 73,000, we are holding somewhere in the middle of that at 61,800 rupees on your screen. Silver did see an all-time highs at 77,900, but that was in 2020. And since then, we haven't seen silver go back to those kind of levels yet again. Well, we are looking at strong physical demand globally. That's not happening in the investment demand, though. On paper, the demand is not so strong. But when you look at the physical buying, that continues to be on the higher side. Inventories on the other side have continued to decline. The COMEX warehouse inventories at 313 million ounces is lowest since June 2020. And when you look at the LBMA vaults, well, the silver holdings there are the lowest since 2016 as well. When you look at the Indian markets, well, the imports here have been on the stronger side, actually the third highest on record at around 6,200 tons there. In Indian markets as well, the all-time high in sense of imports was in 2015 at 7,530 tons. Markets do believe that by the end of this year, we still have this quarter remaining. You could be looking at a similar or even a higher number. This is what we've done in sense of imports in the last few years. After 2 years of decline in imports, this year clearly has been on the stronger side. When you also look at the global demand and supply picture, we are looking at a second straight year of deficit here as well. So while the total supply is expected to be at around 1,030 tons. We're looking at a very strong demand of above 1,100 tons there. Markets are looking at strong demand also coming in from the industrial side, physical part of it. And in the Indian markets, it also is because we are heading into festival and wedding season here as well. So the demand is expected to be strong. The deficit is what the international agencies are looking at. So Silver Institute is putting a deficit at 2,224 tons in this year alone. There also is a metal focus report, which is expecting a higher deficit as compared to previous year. They are putting that number to 71.5 million ounces.
All right, Manisha, thanks very much for that. So that's commodities in focus. 70 points lower is what we have, 17,262 on the index. We'll take another quick break here. We come back and we discuss market technicals. On the other side, we'll get you some trading ideas in a bit from now. Okay, welcome back. 75 points lower. We're at 17,257. Not very much incremental in terms of Nifty moves to report on. Lots of stocks moving around, and we've got our research colleagues joining in. Mangalam, Sonia and Abhishek are with us. Let's start with Titan, Mangalam, which reported a robust pre-quarterly update.
Indeed, it was a very strong quarterly update coming in from Titan, and a couple of things stood out in those numbers. The first one, of course, is while the overall sales grew about 18%, the mainstay of the company, the jewelry business, actually grew 18% and on a high base of 66% same time last year. Remember, the same time last year, we did see some bit of pent-up demand as things gradually opened up after the second wave of COVID, so as a result of which there was a high base. And if you just take a look at a 2-year compounded growth, it is almost 40%, and that is something that the street likes. Importantly, there was a lower than average growth in their plain gold jewelry business, which is a low margin business for them, and as a result of which their studded share increased and better product mix would mean better margins this time around for the company as well. And importantly, the second quarter is usually a relatively lean period for jewelry sales. It's only in the third and the fourth quarters where we see a fair amount of sales coming in on account of the festive season and on account of weddings, etc. So those are a couple of factors that the company is extremely optimistic about, and which is why they've opened 25 stores in the jewelry business and 91 stores in their other businesses as well. If you just take a look at the other businesses, the jewelry, the watch business also showed growth over 20%. The eyewear business showed growth of around 7%, but out there they said that the secondary sales, which is the retail sales, picked up much faster, so that's on an improving trajectory. Carrot Lane, the online business, did well as the other businesses, which are fragrances and saris, grew about 58% on favorable basis. So those are a couple of factors which the street likes about Titans, notwithstanding the valuations.
Thank you very much, Mangalam, for that. I was just looking at the estimates. Edelweiss was only expecting about an 10% top-line growth for Titan this quarter. So compared to that, 18% is clearly a beat. So maybe the street is raising their EPS estimates, and watches has come in as a big positive surprise. But now let's go across to Abhishek. Equitas Small Finance Bank is also clocking in some gains. He's here to tell us more about that.
Well, they came out with a business update and it is as good as it can be, given the fact that Q1 momentum has been carried on to Q2 as well. They have lost out on CASA ratio, but they have made up for the liquidity in the balance sheet via term deposit and bulk deposits. So to begin with, deposit momentum was strong at about 20.1% YOY and about 6.6% sequentially. The loan growth momentum continued to remain healthy at 20.15% YOY and about close to 5.15% on a sequential basis. CASA ratio has declined by 360 basis points on a sequential basis. However, retail term deposits are up 8.2% sequentially and bulk deposits are up nearly 31% sequentially. That has not impacted the cost of funds, which has moved up only by 5 basis points on a sequential basis. So overall, good set of business update coming in from Equitas Small Finance Bank. Back to you.
All right, Abhishek, thanks a lot for getting us all of the details. The stock, however, has come off the highs. It's currently just around 1% in the green and at the low point of the day. But finally, we're also looking at the auto stocks right now. This after Jefferies wrote a note on the sector. So Sonia's here with the highlights. Sonia.
Well, thanks a lot for that. There's a big upgrade that has come in from Jefferies on the entire auto sector. They expect a 17 to 19% growth for the entire pack, passenger vehicles, two-wheelers, as well as trucks, over FY 22 to 25. They also talk about how the margins are expected to improve as raw material costs have fallen quite a bit. Now, double-digit earnings growth is expected on a compounded basis for most OEMs. That's because the entire sector has come off a very low base. The last 5 years, the auto sector has virtually not grown. And now there is a big comeback, especially because of a pickup in demand, as well as most of the supply side issues getting eased out. They prefer stocks like TVS Motor, Maruti, Eicher and Tata Motors. They still have an underperform on some of the global-led OEMs like Motherson Sumi as well as Bharat Forge. But their top pick and the stock which they upgraded this morning is Hero MotoCorp. They upgraded it to a buy. They have a target price of 3,000 rupees, which is well above the current market price. And they say that Hero MotoCorp is coming out of a big bear market and there is an uptrend expected due to electrification of vehicles. In that context, Hero MotoCorp is launching its first electric scooter, Vida, today itself. So that's the big theme that they're playing on. Overall, a large upgrade for the sector. Back to you.
Thank you very much for that. Let's invite Jay Tucker on the show now to get a sense of the market technicals and where we are headed ahead of the weekend. Jay, thanks so much for joining in. Slipped a bit, 17,250 now as we speak. Your thoughts? Is there a trade that you would recommend?
Hi, good morning to you. As far as the index is concerned, then I would say that it's a buy on dip for today's trading session. As far as Bank Nifty is concerned, we see a good support around the levels of 38,800, and that's from the point of view of derivatives data as well. I mean, 39,000 strike has the highest amount of open interest as far as both the call and put is concerned, and since it's trading below those levels, we can see some pressure coming from those levels on the upside. But then 38,800. On the immediate basis is a very crucial support, and if at all Bank Nifty slides to those levels, one should definitely buy, placing a stop loss below 38,600 and targeting 39,200 thereafter. And as far as Nifty is concerned, I mean 17,200 would be a good place to enter. Hence, I have a buy recommendation on both of these, but then it would be a buy on dips. But stock specifically, we are seeing some good momentum. So, as Sonia just discussed about the auto sector, and I think that TVS Motors has been trending up, and the overall momentum out there is absolutely positive and well in the favor of the bulls. It's trading at around 1078 as far as the spot levels are concerned. One can buy this targeting 1125 to 1175, placing a stop loss below 1050. And a second buy recommendation would be on Coal India, which has been trending higher in a first looping channel with a clear reversal in its short-term momentum as well. I mean, this stock is heading towards the levels of 260 on the immediate basis. One can buy this, placing a stop loss below 218.
All right, Jay, thanks a lot for that. So recommendations on Coal India as well as TVS Motor. But with that, we're going to get into a short break now. On the other side, we'll discuss the market fundamentals. Sani Agarwal of SBI Securities will join us. Hi, welcome back. You're still watching Trading Hour. For the market, we've seen a little bit more of a slip, so it's currently around 75 points lower on the Nifty. We're seeing around 0.5% of a cut, and the Nifty Bank also slipped a little bit more with a loss of around 0.9%. So let's invite our market guest on the show now. Sani Agarwal of SBI Securities joins us to discuss the some of his top trading bets as well as his outlook on the market. Sani, good morning, and thanks a lot for joining us. This is Pavitra. You know, what we have been discussing is the resilience of the Indian market, the fact that we have outperformed significantly compared to what's going on in the rest of the world. But normally this is something that, can't last for a very long period. Do you think that this is something where this outperformance could perhaps not be too long-lived and we might see a catch-up? Sani, I think you're on mute, so I request you to...
Yeah, am I audible?
Yes, please go ahead.
Yeah, so yeah, you have rightly pointed out that Indian market has been quite resilient as compared to the other developed and emerging markets. So few things which has played out for Indian market is that relatively a stable currency as compared to the other developed or emerging market currencies. At the same time, there has been a softening in commodity prices, which has played out well for the Indian economy. But post-Fed meeting, we have seen a rupee galloping from 80 to 82 levels. And today itself, the rupee has hit a new all-time low. So it's a kind of mixed set of, factors which are playing out for Indian economy and Indian market per se. So we are cautiously optimistic on Indian equity markets. Anyway, with the results season kicking off from 10th of October, so the market will become a stock-specific or sector-specific market. And on a broader side market, we expect market to trade in a very broad range of maybe 16,500 on the lower end, wherein it finds a comfort on valuation trading at 16-17 times FY24 price to earning multiple. And on a higher end, we expect the market to be levels to be capped at around 18,000 levels.
Sani, in terms of the Q2 earnings season, what is it that you expect on an aggregate basis? Because the EPS for metals, oil and gas is likely to come under pressure due to the lower prices as well as the hit to OMCs given where crude prices are. But X of that, the numbers are expected to look pretty good on a low base. So what is it that you expect?
So in terms of earnings season, which is going to kickstart from 10th of October, for IT sector, we expect Q-on-Q growth of 2.5 to 4.5% for the tier 1 companies like TCS, Infosys, SCL Tech and TechM. So in terms of margin, we feel that IT sector margin for the tier 1 companies have bottomed out in first quarter. So in second quarter, we may see a margin expansion on Q-on-Q basis between 50 to 80 basis points. The commentary in terms of the demand outlook, especially looking at a recessionary narrative which is going on in the US and Europe. So demand outlook is likely to be tracked by the street. At the same time, what is the outlook on attrition and wage? So that's the so overall we feel that IT sector, the froth in terms of valuation has come off. So downside is limited, upside is subject to the outlook which the companies will deliver over next few days. So this is on IT sector. In terms of volume growth or in terms of auto, we feel that the volume growth has been very healthy for passenger vehicle and two-wheeler companies like iShare, for that matter, Maruti. So in auto, again, it will be a mixed bag kind of results, wherein we feel that companies like Maruti, Eicher Motor, TVS, they are likely to deliver a healthy number. So on auto side, we are positive on Maruti, Eicher and TVS. In terms of banks, as we all have seen the provisional numbers which are coming from whether it's a mid-cap bank or large banks like HDFC banks. So all those banks are reporting a very healthy set of growth number in terms of deposit as well as the loan growth. So we feel there can be a NIM expansion as far as banking sector is concerned. So bank sector in terms of valuation also looks decently placed, and we feel that banking is as a sector is likely to outperform over next 3 to 6 months. So this is on banking sector. Yeah.
Sani, any recent initiations, coverage on stocks, anything your team is putting out, focusing on?
So right now, defense is a sector which we find to be very attractively placed in terms of a very strong order book, a very good growth visibility. So as a team, we are working on a defense as a sector. So we are recently we met with the management of Paras Defense, and the management is very bullish in terms of the although it's a very small company, 2,500 crore market cap company, but the growth outlook with the even a smaller companies looking at a healthy order book they are giving. So we feel defense as a sector is likely to be a sector which is likely to deliver healthy return, and our team is working on that.
Paras and anything else there? I mean, have you initiated?
Paras,
yeah.
Paras, HAL and Bharat Dynamics.
Paras, HAL and Bharat. And Paras actually had that crazy move. I mean, in 2021, it went up to 1,300 rupees in that move, and things were actually going crazy. I mean, IRCTC, this one, I remember a bunch of others. From 1,300 to, straight down to about 500, and now about 600, 650. Bharat Dynamics is the other one, Sani?
HAL, Hindustan Aeronautics.
HAL, okay. You've initiated coverage, formal coverage?
No, so right now, I mean, since the team size is very small, so
okay.
We have got a passive coverage. So active coverage is something we will coming out as the team expand over the next 2 to 3 months.
All right, Sani, I also see some of the auto names make it to your top stock picks. So tell us how you would play this sector. Do you like the two-wheeler names? Are you looking at the passenger vehicle makers? And, this space has already seen quite a run-up. So do you think there's lots more steam left? Would you suggest putting fresh money to play even at these levels?
Yeah, so we are selectively bullish on names like Maruti, TVS and Eicher. So for Maruti, basically, the two factors which are playing out is on one hand, there is a healthy demand in. So we have seen that order book of Maruti currently stands at around 3.5 lakh vehicles. And at the same time, the volume growth for the, July, August, September has been very healthy, pretty healthy for Maruti. On the other hand, the cooling off in metal prices will definitely lead to the margin expansion for the players like Maruti. So right now, the EBITDA margin of Maruti is in the range of 7 to 8%. And we expect this margin to expand to a low double digit, maybe 11 to 12% over next 2 years. So Maruti is the one of our top picks, and we recommend investor to deploy fresh money in Maruti at the current level also. And the similar story of margin expansion is playing out on in the TVS. And on the other hand, in Eicher, we have seen a very healthy volume growth in Royal Enfield as a portfolio. So that's one of the stock which we are recommending to investors.
All right, Sani, we leave it at that today. Thank you very much for joining us and taking us through your call on some of these sectors. So bullish on some of the auto names, on banks and defense as well. But with that, we're going to get into a short break now. When we return, we line up and analyze all of the expectations from the large cap IT names in our special segment, Quarter Se Quarter Tak. Stay tuned.
76 points lower. We are at 17,255 on the index right now. Market breadth, by the way, is, it's actually almost 1:1. Advances outpace declines by 100 and then vice versa. So that's basically what's going on. Let me just take a quick look at what's happening as far as broader markets go. We've been looking at gainers, and we've been sort of speaking about gainers like Titan, etc. On the losing side, there are names like Godrej Consumer Products, which lost yesterday by about 4-5%, is down another 3%. Jubilant Food is down about 3.5%. There is India Cements, which is down about 3%. Bank of Baroda. Varroc has been sort of selling off from the word go, is down another 8% as things stand right now. All right, now the earnings season, of course, is just around the corner, and IT companies will be first off the block. This is our special Quarter Se Quarter Tak. Rima is standing by on the big wall to tell us what we can expect from the IT sector in the second quarter. Rima.
Thanks so much for that. So even as the technology sector battles with uncertainty amidst the global macro deterioration, this quarter's revenue growth is expected to be steady and strong, about 3 to 4.5% in constant currency terms, led by the strong order intake momentum seen in the prior quarters. Infosys is likely to top the charts amongst large cap companies with a revenue growth of close to about 4.6%. Let's get that table up for you. But what you would notice is also that the constant currency revenue growth is significantly higher than the dollar revenue growth by nearly 200 to 300 basis points. And this is on account of cross-currency headwinds, which is led by the massive depreciation of the euro, GBP, the Australian dollar, the Canadian dollar, yen against the dollar. That said, the net impact of the currency moves is positive. Look at the rupee depreciation. The rupee is depreciated on an average by nearly 3.5% this quarter, and this is likely to drive a quarter-on-quarter improvement in margins. Amongst the large caps, the biggest improvement in margins is going to be seen by TCS by 70 basis points. But for the others, the improvement in margins is likely to be fairly limited due to the wage hike impact. So Infy gave wage increases to its mid and senior employees in Q2. Wipro's hikes were effective 1st of September, so a 1-month impact. HCL Tech will also have a full quarter impact of the wage hike. Now let's move on to the FY23 guidance. Both Infy and HCL Tech are likely to retain their FY23 guidance on revenues as well as margins. But the key this time is really going to be in the commentary. While the management commentary by the Indian IT service players have been positive in Q1, post-Q1, in the run-up to the Q2 numbers, most of the macro indicators in the developed markets have been deteriorating. So the question is, will this positive management commentary hold up, or are we going to see some signs of slowdown? In that, watch for two lead indicators of growth. One is hiring and the other one is deal wins, and both of which were muted in Q1. In terms of geography and verticals, the key is going to be EU and Europe, which roughly contributes about 25 to 30% of the IT services revenues, and the development surrounding Credit Suisse also puts the spotlight on the BFSI sector, and the retail sector is also headwinded on account of inflation concerns. Another question is, what happens to price increases? Are customers still open to conversations surrounding price increases, or are they pushing back? And finally, as the pressure on profitability mounts, will the industry go slow on hiring? Will they delay the fresher hiring? Will they resort to salary cuts or even lower variable costs? Remember, in the last few months, there have been a lot of reports which suggest that companies have cut back on variable costs. So in a nutshell, commentary which can give you a sense of FY24 revenues and margins will be crucial. Now let's move on to the valuation. Well, the sector has seen a sharp derating. Valuations are down almost 20-25% from its peak levels. But most of it is on account of a lower PE, the PE reset. The earnings downgrades so far have been limited to low to mid-single digit kind. The worry is that if the slowdown accentuates, will we see EPS-led downgrades from here on? That time will tell. Back to you.
All right, Reema, thanks a lot for taking us through all of the estimates from the large cap IT names. It is really going to be all about IT next week. TCS goes first, that is on the 10th. You then have HCL Tech as well as Wipro on the 13th, and after that, on the 12th, sorry, and on 13th, you have Infosys, Mindtree as well as Sani. So it's going to be all about the IT space next week. We're going to get into a short break here, but as we do that, here is some great news for investors. You can now track US market action real time on Money Control. So just log on to the Money Control website or app and stay informed about all that matters in global markets.